Let's do a recap of all of the different indicators we have now added to our chart. Before we do that, we're going to want to save this as a template though, just so that we don't lose it and have to start everything all over again. So we head on back over to our templates button. We can select Save Template, and now you need to give it a name. I'm just going to call this AAA crossover or X-over, even though it is a lot more than just a crossover system. But that is how we started. Now I'm going to choose the Euro-Dollar, which is the currency pair that I trade the most. I'm going to select Templates, and I'm going to load the AAA crossover on top. Now this strategy can be traded on multiple time frames. I find that the more aggressive traders enjoy trading on the 15-minute chart. And if you find that that is too quick and you get too many of these small fake outs, then give it a shot on the 30-minute chart and find which one is more comfortable for you. For this example, I'm going to stick to the 1 hour because we typically find the 1 hour has larger movements and it's easier to read. The only problem with the 1 hour chart is that you could wait days at a time before you actually find the right trading opportunity. But that's fine for now. Alright, the first things that we added was the 5 and the 10 moving average. The 5 I set as the red one and the 10 I set as the blue one. We say that when we see those two moving averages cross over, we're expecting the market to be turning a little bit. And if that turn is in the direction of the bigger trend, then we consider that as a trigger, a place to enter. For example, we can see here that the market has been going down. So when we get the red line go above and then down again, we get this sort of crossover happening. That's when we would consider a sell position based purely on the 5 and the 10 crossover. But we would need some kind of confirmation. Yes, we saw that the trend was coming down, that's fine, but what if the market had already moved too quickly? Well, that's where the stochastic comes in. So at that crossover, the very next candle, which would be during this blue candle, we're actually making the decision, we would see that stochastics is moving down and is not in oversold. It's not below 20 yet. So stochastics is saying, that's fine, you can go for it. Then to confirm, we have this MACD of 10 and 50, which if you remember, it should be very similar to this 10 versus this 50. And it is negative, and it is heading even more negative. So that's confirming that the direction is correct. So entering a trade at about this level would have been a valid entry point based on the crossover. Now we get a 5 and a 10 crossover here, where the crossover is going above the blue. So we have a look and we see what's happening, and we still believe we're in a downwards trend. So we would not be buying at this crossover here. If we line it up, we can see stochastic at the exact crossover is heading up, but not yet. It does quickly go oversold, overbought, but we wouldn't have entered that trade already on this candle purely because it's in the wrong direction. We can also see that the MACD is negative. It is moving positive. However, it is still heavily negative, telling us that the trade is down. We get another crossover coming up here, where the red goes below the blue, signaling us it's time to look at a sell. So we line everything up and we have a look. MACD is negative, heading even more negative. Stochastic is pointing down, but is not oversold yet. So this could have been a valid sell signal at about this level. Now this trade petered out reasonably quickly, so you would have only made about 10 pips out of it, but at least it's success. Over here, we see that we get a positive crossover forming. So we look at the decision candle, we line it up, and we see that the MACD disagrees, so we would not. Stochastic in this case would be fine to enter because it's not yet overbought, and remember we can't see into the future, but still it's going against the trend. We then get another short position here, that would be our decision candle, and we don't take this sell, because have a look at stochastic, it's gone oversold. It's telling us that the trade has already happened, it's moved too quickly, and we'd expect the market to turn backwards. Now, by this point, we can see that the market is starting to level out. And when you start getting these small candles across here and the market is moving sideways, as it has been for some time, you can see we have this downwards trend and it starts smoothing out and going sideways. This is where it's dangerous to trade. The only person who can make money in this is the broker. And as much as we like our brokers, we're more interested in our own money. I would love to tell you that we would have caught this trade from all the way over here, but we wouldn't have. And let's look at why. First off, the market was moving sideways, so there's no clear direction. So that's when we already start feeling quite nervous. When we see this trade happening, let's say towards the end of this candle, we can see that stochastics is already overbought. So it's too late to enter the trade. The MACD did give us a crossover, which may have been a reason to enter the trade. However, such a strong stochastic overbought would have told me no, it's too dangerous. So we would have to lose that trade and sit and wait. We see a tiny short crossover come, but we already know that we're looking at buy markets, so there would be no trade at that point. And then we get the buy crossover, and this is before stochastic went back to overbought, and the MACD is lined up. So we could have caught the trade from here, and at current time that would be 50 pips profit, or 512 points. So that's the one trigger, is looking for the 5 and the 10 crossover.